It's Friday, October 2nd. Welcome to a new episode of Bazaar. I'm your host Sid, and with me today is Rishabh Khanna, my friend, and Rishabh has been working in the AMC industry for the past 4.5 years. He has considerable knowledge of the mutual fund industry, of the in and outs of asset management companies, and the first person that came to my mind when I heard about UTI AMC's IPO was Rishabh Khanna. So welcome to the show, buddy. It's great to have you.
Hey, hi Siddharth. Thank you for having me on your podcast and for these kind words. Looking forward to doing justice to our discussion today.
So let's get cracking on the show. We will be talking about UTI AMC's IPO, and we will analyze the business of the AMC industry, not only of UTI AMC, but the competitors as well. And we will try to paint out a very long-term picture of the company. So we are not concerned with the listing gains. We want to find out, whether this company is a long-term buy or, what's the business model. And just to give you an update, UTI AMC's offer closed yesterday and was subscribed around 2.3 times, which is I think it's a pretty low number given that the current IPO frenzy that is going on. And if you are interested not only in the listing gains, but also in the business and the AMC industry, then this show is just for you. We'll also run the company through 6 parameters and we'll see whether the company passes the test. But first, let's go back in time. UTI AMC has been in business for around 55 years. That's a really long time. The company's got a rich history, isn't it?
I completely agree with you, Siddharth, on this point. UTI was established in the year 1963 by the government. It launched its first scheme, US 64, which was one of the important schemes in the financial service industry in India. That deserves a separate podcast in itself. So what happened was UTI launched their schemes and they enjoyed a virtual monopoly till 1987. So right from 1964 to 1987, they had a virtual monopoly. In 1987 came SBI and a few other banks, which were primarily the public sector banks. So they entered into the foray of the asset management industry. With 1993 came the new mutual fund regulations. With the mutual fund regulations coming into the picture, a lot of AMCs entered in the industry. Some of the names being ICICI, Nippon set up its asset management company in the year 1996, I suppose. And actually, the AMC which we all talk about and which we all admire, that is the HDFC AMC, was established in the year 2000, which was actually late to the party of the asset management industry.
Wow. I mean, no wonder that the stock of HDFC AMC commands such premium, because in just around 15, 17 years, it has become the second largest AMC in India, isn't it?
Exactly. I completely buy your point. In fact, it was at the number 1 position for a large number of years. And as recently as last year, it has been dropped to the 2nd position with SBI taking its position. So the growth story of HDFC AMC has been fantastic.
And coming back to UTI AMC, I remember, around the year 2002, there was some sort of breakup in the company. Like, can you tell us about that?
Exactly. In fact, in the year, so it was Feb 2003, where they decided what they're going to do is they're going to bifurcate UTI into UTI Asset Management Company, the company which we know today, and bifurcate their assured return schemes, the US 64 schemes, into another entity. So the asset management company, the UTI company that we know as of today, was actually formed in the year 2003.
And they've taken their sweet time to get listed, isn't it?
Exactly. In fact, listing has been one of their main priorities since they ventured into a separate entity. They have tried multiple times to get it listed. Sometime way back in the year 2007-8, when the global recession hit, they had to postpone their plans.
Okay, so this is not the first time that UTI AMC is coming out with a listing. I did not know that. That's really interesting. Okay, so the history is good. I agree, because, a lot of people might not know this, but yeah, like UTI AMC has been in business for the past 55 years. I've not heard of this company, not in a big way. I know that UTI is a company in the mutual fund industry, but I did not know that it had such a rich history behind it. So what we're going to do now is we're going to run this talk through some parameters that we selected, and I'll just tell you the parameters. So the first parameter is going to be the company's competitive advantage. We'll just analyze what Warren Buffett calls as the moat. Second parameter will be the future potential of the company and of the industry as a whole. Our third parameter is going to be the customers of the company, how reliant they are on the company, what is the revenue model of the company, is it a recurring revenue model, and who are the customers of the company. Our fourth parameter, which is very important, is the quality of the management, which is basically governed with steering the company in the right direction. Our fifth parameter will be financials, the balance sheet, P&L, cash flow statement. We'll check how good the numbers are. And the most important parameter, the sixth one, is the valuation of the company. So Rishabh, before we dive into these parameters, I think it would be important that we explain some key terms related to the AMC industry.
Okay. So the asset management industry, one of the main terms that the listeners should know about is the asset under management. So asset under management signifies the assets for which the AMC gives the advisory fees, on which they earn management fees. So that is their revenue source. And management fees is charged on the percentage of their AUM. And this is how they incur their revenue.
So I've not really heard of this company like in a big way, So does this company have any competitive advantage? What is the moat over here?
So Siddharth, coming to the moat, first of all, UTI, we being the younger generation would not be too aware of their products. But if you can ask your parents, if you can ask your grandparents, they would certainly be aware of UTI, and I would be amazed if they wouldn't have invested in one of their schemes, being it a mutual fund or their ULIP or any other financial product that they had to offer. They had a virtual monopoly for 20 years. They had the first movers advantage in the asset management industry. The asset management industry started in India because of them. So the obvious benefit that they had was the first movers advantage. They have a very fantastic distribution network, because when you have the first movers advantage, you can build up on the distribution network, and you can reach to places where other AMCs don't even think of. So normally our AUM is quite restricted to the top 10 cities, top 30 cities. They have a deep presence, which has been due to their legacy, due to which they have presence in various tier 2, tier 3 cities also. So the two moats that they have is the brand name in itself and the reach that UTI as a company have.
Yeah, but I agree that, it's been it's a legacy company and it's been like operational for a long time, but even after the first mover advantage, it still is the seventh largest asset management company in India in terms of AUM. So, how did HDFC AMC Nippon AMC get so far ahead of UTI AMC? What did UTI, where did UTI miss the trick over here?
Sure. So for me to explain this point, how did the industry develop, I'll give you some data points. So in the year March 2003, which was after UTI was separated into two companies, the industry AUM was close to around 80,000 crores and UTI had 17% market share. HDFC and Reliance had 8 to 3% market share, and UTI was the first player. Obviously, they had the first movers advantage. Then if we move on to 2010, then the industry AUM went to 7.5 lakh crores. UTS still had 80,000 crores and had an 11% market share. HDFC also had 88,000 crores and a 12% market share, and Reliance was the leader. So UTI in the year 2010 was the fourth largest asset management company. Now if we move ahead to March 2020, a decade has passed by. The industry has grown tremendously. The average assets are 25 lakh crores. UTI grows from 80 lakh crores to 1,34,000 crores. HDFC, on the other hand, has increased from 88,000 crores to close to 3,40,000 crores.
Wow.
Reliance, on the other hand, has increased from 1,10,000 to 1,84,000 crores. So they, in the decade from 2010 to 2020, UTI slipped from 4th position to 7th position. Now coming back to as latest as July, August, where the assets of the industry were 27.5 lakh crores. HDFC maintains its market share. UTI loses another spot. So Axis AMC has taken over UTI for the 7th position, and UTI has actually dropped down to the 8th position. So that is how their market share has progressed. They have constantly lost market share in the industry, which has increased from 79,000 crores of AUM in the year 2003 to close to 27.5 lakh crores AUM.
Yeah, I mean, also a reason for this is I feel that, UTI in its essence is a government company, and like most government companies, right, they are probably not very quick to change. So from a competitive point of view, I think, it faces intense competition from the likes of SBI, HDFC, Nippon AMC, and in the past 20 years, it has consistently lost market share. So there is something that these guys need to figure out. Otherwise, going forward, if they keep losing market share in this way, it does not look good, does it?
While I agree to your point, because effectively in the year 2003, the revised entity, which was UTI Asset Management Company that we know today, was sponsored by SBI, PNB, BOB, and LIC. So this in fact was sponsored by the government entities, which later had an international player by the name of T. Rowe Price, where they invested in the company. So to answer your question, whether it's a government company as such or not, the sponsors are government company, but it kind of effectively worked as an asset management company and not completely as a government company.
Okay, so from a competitive point of view, there's a lot of pressure, and we'll just have to see if UTI can catch up to the competition. And moving to our next parameter, which is the future potential of the company and of the industry. So tell us something about the potential of the industry. We know that the mutual fund industry is extremely underpenetrated, but like everyone I know is investing in mutual funds. How much of a growth is there in the industry, and how much of it can be captured by UTI AMC?
So to answer your question, first of all, yes, the industry is growing, and in the last decade, it has been booming. I would say 19-20% is the average growth rate that the industry has had. So the growth in industry has been tremendous. There has been a shuffle around with the market leaders according to the market share, which I explained. The industry if you see India as a market, we are good savers, but if you ask us, do we invest money in the correct way? The answer to it is no. If you ask the exposure of an average household to equity, it is tremendously low, as even if you compare it with something like gold, real estate, which were the traditional safe haven investment options. So the growth trajectory is tremendous. If you ask me, there have been estimations that in the next decade, this 27.5 lakh crores will go to a figure close to 100 lakh crore. So
Wow.
that is something which is a very big figure, and to achieve that, there is obviously going to be participation from the retail, which are we investors, obviously from the institutional clients, to park their money, and the growth trajectory is there. It is just which AMC captures the market share is going to turn out the winner, because the market here is fiercely competitive. As you could have already seen, the market leadership changes. So when the market leadership changes, it is an ultra competitive market, and to survive and to sustain the market share is something which the asset management companies have to focus on.
So do you think UTI AMC could be a very big beneficiary from this growth, like from 25 lakh crore to 100 lakh crore? How much of a beneficiary would UTI AMC be? Like, would it be able to capture a greater percentage of that, or the AUM is going to be stagnant according to you?
Sure. So to answer this question, we'll have to dig deep into a few data points which we normally use to analyze an asset management company. Just to touch upon a few data points is UTI, being a first mover advantage, still has the highest number of folios in the mutual fund industry. If you ask by rank, it is 8th, but by folios, it is the largest, followed by HDFC. So what does that signify? On one side, you can say UTI has got the most number of investors, so they are in a good position. But what you have to see, even with around 10.9 million folios, they are still able to garner only close to 1,50,000 crores of AUM. Where you compare it with someone like HDFC, with less number of folios, it is more than twice the size of what UTI is today. So what HDFC has been able to do is to increase the average investment amount of its folio. So in fact, if you see, so I have given you the decade trajectory of the AUM. If you just compare it with the AUM that UTI had on March 2018, and the AUM that was 1,50,000 crores. And if you compare it with the AUM that it has currently, it is 1,50,000 crores. So effectively, the growth in the AUM has been next to zero. And if you compare it with a company like HDFC, so HDFC had close to 3 lakh crores in March 18, which currently stands at close to 3,80,000 crores. So HDFC has been able to increase their AUM. And if you compare it with someone like Nippon, so Nippon actually had 2,20,000 crores of AUM on March 18, which got reduced to close to 2 lakh crores currently.
So the picture does not look that optimistic for UTI. I mean, from a beneficiary kind of view, like even if the industry grows, the chances of UTI being the biggest beneficiary is not there. But, one thing that did strike me was that, how UTI seems to attract a lot of government money. Like, for example, in the prospectus also, they've mentioned this. UTI recently got the approval to manage 55% of the total corpus of the Central Board of Trustees of the EPF. This is the Employees Provident Fund, one of the biggest funds in India, which is somewhat around 4.5 lakh crore. It's a big amount of money. And how much of an impact that would make on the revenues going forward is still to be seen. We don't know that right now, but I mean, it gets a lot of government money, and this is somewhere UTI could grow in the future, like getting money from EPF, the pension funds, and also the company has witnessed some really good growth in the retirement funds it manages. So we're not completely discounting UTI here, but the growth does look, very minimal. Like even going forward, we do feel that UTI has to do something very innovative. It has to bring that brand awareness among the youth as well.
So UTI, just to clear it out, UTI is in the asset management industry, which includes mutual fund AUM, which is the majority of their AUM, but they also provide advisory services, as you said, on to PF of government authorities. It also advises on NPS. Now the problem with these type of products is these products are very large in AUM. So you'll be happy with such a large AUM, but these don't materialize into any management fees because these are very low yielding products. That is where the advantage lies. Is UTI will obviously be given a preference over other asset management companies to handle these PF accounts, but will that materialize into anything on the top line or the bottom line? The answer to it is it would not.
Because even if they get a lot of government money in the sense of EPF and the NPS, but the yield there is so low that even having a large AUM is not going to matter that much. It's not going to move the top line in a big way.
Completely agree with it.
So our next parameter is customers. And what do you think about the customers of UTI AMC?
So I'll start with the advantage that UTI had. As I already mentioned, it has a very good distribution reach. Now, with that distribution reach comes a large amount of B30 AUM. So just to give you some insights, the asset management industry is bifurcated into two AUM buckets. One is T30 bucket and one is B30 bucket. T30 bucket signifies the AUM from the top 30 cities, and B30 signifies the AUM from beyond 30 cities. Now, traditionally, till date, the AUM has been concentrated towards the top 30 cities. Where a UTI has an advantage is it has branches in B30 cities also. And just to give context, the AUM of UTI has the highest proportion of B30 AUM as compared to other peers. Now, does that materialize into a significant market share? The answer to it is no. So if you look at the B30 AUM proportion, which is close to 4 lakh crores, the significant market share goes with SBI, which is close to 21%. Then it goes to HDFC, which is close to 12%. Then comes UTI at close to 8.5%. So even if you see the first mover advantage that UTI had, it did not materialize into it gaining a significant market share, which was eventually gained by SBI at 21%. Moving on to another parameter for which we classify customers in the asset management industry is by the SIP book. So now this is very important for all asset management companies. So just to give you a comparison, SIP is considered as sticky money, which stays along with you for a large number of years, be it 3, be it 5 years, or whatever it may be. So this gives the asset management companies a comfort in the sales that they would be able to generate. So just to give you a few data points, HDFC has an SIP book size of 1,000 crores every month. Compared with Nippon, it has 700 crores. Now, if you compare it with UTI has close to 240 to 250 crores of monthly sales being generated from SIP. Now, this is a major deterrent if you look at for UTI, because the average increase into their top line is going to be 240 crores only from the SIP book. And if you compare it with someone like HDFC, it will straight away contribute 1000 crores of SIP flows every month.
Yeah, that makes a big difference. I mean, HDFC has 4 times the amount of SIP inflows than UTI, and it's gonna be a big impact on the top line going forward. And with this, we've covered the customer parameter. We've also, touched upon the industry and the potential of the company and the competitive advantage. But moving on to the quality of management, the CEO of UTI AMC is Mr. Imtiazur Rahman, who has been with the company since 2003. He's been with the company for a long time. He knows the in and out of the company. So what do you have to say regarding the management of the company and the strength of the management? What do you think about that?
So even before the current chairman, UTI has had the privilege of being under the leadership of people who have gone on to take much bigger roles and have been experts in the industry. Just to name a few, UK Sinha went on to be the chairman of SEBI, Leo Puri, who was appointed after a 2 years gap in the leadership. So there was no one appointed before him. So there was a 2 years gap, went on to manage UTI from 2013, and after he leaving the company, there was no one to lead the company for 2 years, which led to Imtiazur taking the leadership of the company. So UTI has been under the leadership of people who have been experts in the industry and who have tried to turn around the fortunes for UTI, but somehow it has not materialized into financials and their numbers. So to keep the answer short, the management is something which is of top quality. It is just that it has not materialized into performance.
Yeah, and one thing that I like to see while evaluating the management of the company is the managerial remuneration. And like if in case the managerial remuneration is very high as a percentage of revenue, then that's a red flag for me. And from that perspective, the CEO is being paid around 2 crores, which is probably below the industry standard. Also, I like to see whether the management has any skin in the game, which means that whether the management holds any shares which would motivate them to ensure long-term wealth creation for shareholders. From that point of view, as on the date of the prospectus, none of the directors hold any equity shares in the company, and they have been allotted stock options, but those options will vest in the future. So not a lot of skin in the game also.
Completely agreed with you, Siddharth. So the remuneration of 2 crores is within the industry standard and not at a higher scale. And UTI has been looking out to give a lot of ESOPs as compared to maybe the directors having their own skin in the game.
Moving on to the numbers, we'll talk about the financials of UTI AMC. And I came across the prospectus of UTI AMC, and the balance sheet looks good. Okay, because the thing to remember here is, just for all the AMC companies out there, their business model is pretty good. They don't have to make any upfront capital intensive investments. It's a service company. Like, they're just managing mutual funds, and it's a pretty asset light model that they have. And talking about UTI AMC, UTI is a debt-free company. It does not have any borrowings. It does not have any loans. It also has a healthy cash balance of around 115 crores as at September 2019. And the balance sheet size is around 3,000 crores, of which 70% of it is in investments, in mutual funds, in offshore funds and venture funds. So the balance sheet looks pretty good. But what about the P&L? How does that look?
So Siddharth, I completely agree with your point with the asset management industry being an asset-light model. So what this helps the asset management companies is economies of scale. So just to give you an example, I would like to go into the financials of all the three listed peers, which is UTI, HDFC, and Nippon, and just give you some insights on it. So if you see the P&L of UTI, the revenue has deteriorated. There has been a deterioration of the revenue, and by revenue, I mean the revenue from the sale of services. For them, it is the advisory fees. This has deteriorated irrespective of it having a large AUM coming from the government and it maintaining its AUM. On the other side, compared to its peers, UTI has the highest cost to income ratio. Now, remember I told you the asset management companies are able to generate economies of scale, here is where the economies of scale are generated. If you see, the cost to income ratio for UTI is close to 70%. Now let's compare it with someone like Nippon. It has 50%. Now let's compare it with someone like HDFC, which commands a premium, that is 25%. HDFC has a cost to income ratio of only 25%. So this is where the economies of scale kick in. Now, major cost for an asset management company is the employee cost. That is the reason where UTI is not being able to achieve economies of scale. If you look at the employee cost, generates close to 62% of its total cost. Compare that with Nippon, it is 48%. Compare that with HDFC, it is 43%. Now, the problem with having such a high employee cost is a double-edged sword. In a booming market, it gives you tremendous economies of scale, while in stagnation or in periods of degrowth, what it gives is it becomes a burden on your cost side and effectively on the cost to income ratio. So UTI as a company has the highest cost to income ratio. Now going back to the top line, which is the revenue growth, HDFC has been able to increase, have a growth of around 20%, which is in line with its growth of AUM. Compare that with Nippon. Nippon has also seen a degrowth in its revenue margins. So there is where HDFC clearly shines. So if you do a comparison with all the three companies, Nippon has market leadership in the ETF space. Now ETF space is something which is a low yielding product in itself. Now if you compare that with UTI, UTI has a lot of government money, which does not generate into any meaningful revenues. Compare that with HDFC. So HDFC has a decent equity to debt mix, which it is able to translate into growth in the top line, as well as by doing cost control measures and maintaining a sustainable cost to income ratio. They're able to generate maximum amount of equity yield or gross yield as compared to any of its peers.
I agree. I mean, because when I first looked at the P&L of UTI AMC, right, I came across very important numbers like, I'll just give you an example. In 2018, the company earned around 966 crores in management fees. Okay, that number is down to 787 crores in March 20. So, the revenue has been on the decline. And I mean, at the same time, this is where the peers have been increasing their revenue. So Nippon, HDFC AMC, their revenues have been on the rise. At the same time, UTI's revenues are going down. So this is not a very good metric when you say that you are the largest AMC by asset under management in the country, isn't it? I mean, you're saying in your prospectus that we are the largest asset management company in India. And if you take a look at their P&L, their revenues are declining. For the past 2 years, their revenues have been going down. So something's not right here, for sure.
So, Siddharth, the AUM, as I previously mentioned, was stagnant. So I'm talking about the mutual fund AUM, which was stagnant, and the government money, on which UTI provides advisory, has shown a remarkable increase. But it has not materialized into the revenue. A part of it is attributable to an industry-wide change in which the SEBI had curtailed the expense ratio in the interest of investors, and the earnings of the asset management industry were reduced. So it had impacted each and every asset management company. But if you see at HDFC, even with this change, they were able to show a growth in their revenues as compared to both the peers of Nippon and UTI, which showed a degrowth.
All right. And in terms of profit after tax, I think the company's net profit margins were stable around 32% for 2019 and 2020. But again, the PAT has decreased year on year from 405 crore in 2018 to 276 crore in 2020. So again, it's not a good picture. I mean, the PAT is going down, the revenues are declining, even the cash flows from operations are going down. They are positive, but again, there's been a decline in the cash flow from operations as well. So from a financials point of view on this parameter, again, UTI, we're not saying that UTI has not passed this test, but again, compared to its peers, I would say UTI, it has not shined here in terms of its peers.
So Siddharth, just to add one more data point, if you compare the Q1 results of this financial year, which are obviously impacted by COVID, HDFC AMC show a degrowth in the revenue by 11%. Whereas if you compare that with Nippon and UTI, they have shown a degrowth of close to 25 to 30%. So that is the impact this COVID has had on the financials of these two companies, whereas HDFC has been able to mitigate the top line impact and has been able to also increase the profitability if you compare it with last year's quarter.
I mean, this is the reason why HDFC AMC commands such a premium, isn't it? I mean, the company is trading at around what, 38 times its earnings, but I mean, it's justified. HDFC has a very robust business model, and even COVID, even after, COVID having such a significant impact on all the companies out there, I think an 11% degrowth is not that much. I mean, it's something which HDFC can easily recover from. So coming on to our last parameter, which is the most important parameter, valuations. And if you're a long-term investor, I think buying the company at the right price is the most important thing for you. So how does UTI AMC stand from a valuations point of view?
So Siddharth, to answer your question, UTI has a P multiple post listing at its upper band at close to 26. If you compare that with the P multiple, as you already said, for HDFC and Nippon, it is close to 37 to 38. But if you ask me on a personal front, what I see is P is just a ratio. Eventually, the price is going to coincide with earnings. Now, how do earnings come? Earnings come from growth. UTI, as I have already given you a comparison, has not shown a positive growth in the last 3 years. HDFC, on the other hand, has shown a positive growth in the last 3 years. Nippon, after the sale to Nippon, has been increasing their revenues and has been going on an upward trajectory, at least on terms of AUM. So if you ask me, the multiple that HDFC or Nippon commands over UTI is justified, because at the end of the day, they are showing signs of growth or even glimpses of growth which the investor wants.
That's true. I mean, because a lot of people have invested in UPI only for the listing gains. The stock has been very cheap from a valuations perspective, but again, I think the market knows it has valued the company in such a way that it's justified. They know that the company, it's not very competitive in nature, and it does not fare that well against its peers. So I think a 26 time PE is justified. But what do you think? Like, are there going to be any listing gains?
So while I cannot predict exactly what could be the listing gains, it could be close to around 10 to 15%. The listing gains would not be that much, because as rightly pointed out by you at the start of the podcast, the subscription figures are not that great. The gray market premium, which is used as an indicator of the premium on listing, was also not that great. So to answer your question, the listing gains would not be that great, because the market has already discounted the fact that the growth has been stagnant. In fact, it has degrowth. The profits have not been that great. So from a listing gains perspective, it does not look too promising.
All right. And even from a long-term perspective, like people who want to buy the stock from a long-term perspective, I would say, just watch the next few quarters, like just see how the company performs and see if it can generate decent revenue growth. Like if it can at least get a 5 to 10% revenue growth quarter on quarter, that would be a positive sign. And for now, I think in the listed space, you would do better if you would invest in HDFC AMC or Nippon AMC, even though they are trading at a very, like, I would not say at a very high premium, but, moderate premium that they're trading at. So you would do much better if you would invest in HDFC AMC or Nippon AMC compared to UTI. But, we could be wrong. We are not experts. And I would suggest you do your own research before you make any investing decision.
I'll end the podcast with saying that mutual fund investors have faced a lot of pain with their recent returns, but at the end of the day, mutual fund sahi hai, and with proper research, mutual fund companies bhi sahi hai. Sorry, I had to use that pun.
That was a good one. And I agree with you. Mutual fund sahi hai. And in the long term, I mean, people who are patient enough, who, can hold their nerves for the next 5-10 years, I think they're going to make a lot of money. It's all about being invested in the market. The longer you're invested, the chances of you making a decent amount of money, creating wealth increases. So I definitely agree. And it's very exciting. I mean, like you said, the mutual fund industry is going to grow from here. 100 lakh crore is a very big number. Let's hope it reaches there. It's going to benefit all of us. And thank you once again for coming on the show.
Oh, thank you so much for having me.
All right, guys, that does it for today's edition of Bazaar. people on the show may have certain recommendations to buy or sell, but don't buy or sell based on what you hear. Do your own research before you take any investing decision. Please go through the financials of all these companies before you take any decision. This is not an investing advisory that we are doing here. And you can reach out to us at thebazaarpodcast@gmail.com. We would love to know what you think of the show. This is something new that we've done with the show. So if you like what we're doing, and if you like this new concept, we would, try doing more company analysis in the future. Have a great day, and we'll see you next week.